Welcome to our quick guide on how to invest money for beginners. Whether you're looking to grow wealth or secure your financial future, investing is the way to go. Let's dive in! Number 1. Stock market, stocks and ETFs. Start with ETFs or index funds. These are collections of stocks that track the market, like the S&P 500. They're a great way to diversify with low risk and low fees. Number 2. Bonds. Bonds are safer than stocks. When you buy a bond, you're lending money to a government or company in exchange for interest payments. Great for stability. Number 3. Real estate, REITs. Real estate can be expensive, but REITs, real estate investment trusts, allow you to invest in property without buying a building. It's a simple way to earn from real estate. Number 4. High-yield savings and CDs. Want safety? A high-yield savings account, or CDA, certificate of deposit, can help you earn interest with minimal risk. Great for short-term goals or emergency funds. Number 5. Robo-advisors. Robo-advisors like Betterment and Wealthfront use algorithms to manage your investments. Perfect for beginners who want a hands-off approach. Remember, start small, stay patient, and invest for the long term. Investing is a powerful way to grow your wealth, but it requires knowledge, patience, and a solid strategy. Here are some essential tips for investing that will help you make informed decisions and build wealth over time. Start early and be consistent. The earlier you start investing, the more time your money has to grow. Compounding, the process where your investment earnings generate earnings themselves, works best over long periods. Even small, consistent investments can lead to significant wealth over time. Example, if you invest $5,000 at age 25 with a $750,000, if you wait until you're 35, that same investment will only grow to about $30,000. Understand your investment goals. Before you start investing, clearly define your financial goals. Are you saving for retirement, buying a home, or building wealth for the long term? Your goals will determine your investment strategy and risk tolerance. Example, if your goal is to save for retirement in 30 years, investing in growth-focused assets like stocks or index funds may be suitable. If you're saving for a short-term goal, e.g., a home purchase in 2 to 3 years, you might prefer safer investments like bonds or a high-yield savings account. Don't forget to subscribe and hit the bell icon for new updates.